Welcome to another edition of the Your Money Personal Finance Podcast. I'm John Abbott. He is Peter Cishecki, president of Everything Financial. You can find him at everythingfinancial.com, home of the Omni Formula, and now Everything Mortgages as well. Peter, we just enjoyed episode 5 with plenty of listener feedback questions. So we invite those you who listen to get your name heard, get your question in. Your money at everythingfinancial.com is the way to go. That is the outlet to get your question into me, to ask it to Peter. I'm just the middleman in all this, but I enjoy my small role here. Peter is the whiz and the guru with all the years of experience under his belt. We also continue to invite you to listen, of course, to the podcast, subscribe to the podcast and all the platforms. The Everything Financial YouTube channel is now up as well. You can rate it, share it, like it, and review it as well. And that is all very much appreciated. And Peter, in the days that we're currently living in during this COVID pandemic, the government has provided many different options to help people. Some are better than others. Some maybe in the short form incarnation of that government program is great. However, we continue to recognize one thing is that the debt is piling up in this country. So one of the first episodes we dug into what the federal government was doing with all the various COVID emergency benefit programs. Many have now ended or transitioned. And so we're going to kind of bring a refresher here, so where everything's at with the government, Peter, and you have some important details on some of these grants and programs available.
Absolutely. You just fire away with all those different acronyms we're going to give people, and Cerb and CW this and C that. And I tell you, it sounds like a lesson in, Sesame Street here with the alphabet, but we'll try and give people our opinion, the facts, and point them in the right direction. And more importantly, plan for what happens again, or plan on what you should do to move forward. You need to become more dependent on yourself, less dependent on the government, because you just don't know what's going to happen. You definitely have to take responsibility for your own finances and develop your own little safety net, because you can't depend on the government always being there, because the government can change, things can happen. You have to be able to move forward. And you know what? Living off of government dependent programs is going to keep you here. You're never going to get anywhere beyond here. And I don't think that's what people in this society want. Everyone wants to move forward.
Well, let's start with a big portion of the demographic that is students that, they're sometimes forgotten in this, how much they can be affected by either graduating students that are, counting on certain things to come to pass in the workplace, or those that are already having troubles paying off their student loans, needing to go get more money. The Canada Student Service Grant was supposed to be over $900 million. It got started. It didn't go anywhere. It got tangled up with the WE charity as well. So students, they really didn't get the money that they were counting on, and taxpayers were right to be outraged as well. What is the latest as it relates to students, and what's moving forward out of this?
Well, there's different student benefits. You also have the Canadian Student Emergency Benefit, which, how much went into that one? I mean, $2.8 billion went into that. Here's the thing. Students were given opportunities for loans, assuming they couldn't get work. But here's the overall truth in that is students didn't have to apply for work. It was, you can apply for a benefit. The government assumes you couldn't get a job. And guess what happened through the summer? And we know thousands of businesses couldn't hire people because the students weren't applying. So what students should look at doing is, as businesses are trying to get back on their feet and survive and hire people, do what a lot of students do. I know a lot of students who do this, a lot of clients' kids. Go apply for 2 jobs and realize it might take you 2 years longer to finish your education. That's what you might have to do. And there's nothing wrong with that. No one says your university has to be done in 4 years. Because remember, COVID and what it's done to our economy, as Dr. Bonnie Henry says, it isn't forever, it's just for now. I say, so when the government benefit ends, do you want to be dependent on the government. And I can get into the we thing and where the heck is $400 million gone? We've been down that road. The government really needs to have their feet held to the fire. Let's forget about we. It was a disaster, mishandled by the government. We know about the conflict of interest. It's past. Let's move on. Go out, find a job. I don't know about you, John. I mean, and I went to university. When I was in university, I worked 2 jobs, sometimes 3. I did come out of university with no debt. I know people now whose kids are working as a barista at one place, a server at another place, answering phones at another place. Here's the thing, university is less about the education you receive. I'm not sure a doctor, lawyer, accountant, or an engineer, really, not just those 4 things, obviously, but those are the 4 right off the bat. It's like, yes, you have to go to university. It's more about the connections you make that lead you on to other jobs later on. So students, what I can tell you is, if you haven't been working, well, you're really going to have a hard time transitioning to the new EI benefits, because even though it's less time now to get EI, which the government is helping you transition from the Cerb, you don't have to have as much work time to get there. But go out, find a job, because here's what happened. And I hear this from countless small businesses. The amount of people who were on Cerb, and this is not fair to the ones who really needed it, because there is people who really needed Cerb. They needed those benefits. And there is students who had nowhere else to turn except the student benefits. That's a fact. There is some. The problem is it's kind of salted and ruined by the ones who abused the system. There's thousands upon thousands of people who were making $2,000 to $3,000 in jobs who quit to live on the beach or mountain bike in the summer and collect $2,000, acting like it was a free gift. It is still taxable money. So this is what employers are doing. Employers are asking you, what did you do last? Were you on the Cerb? If so, why? And they're checking with your past employer to see if you quit. I know countless of employers who will not hire you if you were on the Cerb because you just didn't want to work. Go out and get a job, because it's like musical chairs. If you don't, you're going to be left standing and all the chairs are gone. Go out now, find a part-time job. It doesn't have to be in your field, because here's a fact in Canada. If everyone on unemployment went and applied for a job doesn't have to be the job, just a job, there would be 0 people on unemployment. There's more jobs available than there are people wanting jobs. So you have to take some responsibility. You cannot depend just on the government benefits, because the transition is very limited to EI. It's not that easy.
I wish that world was true, where everyone would have a job and we could
They
all
could.
contribute that way. And we know that it's not entirely going to happen, but I think
No.
good advice nonetheless for those students that are able to. It's not a fallback. It's not a free vacation. In fact, you need to think about more than just your own little bubble. I guess we could steal that term now, because it's affecting the greater scheme. And it's actually, Peter, going to affect their future. I mean, this is a significant amount of money the government is handing out. It's going to take a long time to even make a dent into that. So Cerb was quite helpful to some, but it's just adding on to the weight of this national debt. Cerb is done as of September 26th, so that's in the rear view. For those that did need it, how do you transition? And are you in favor of then the EI program? And what were your thoughts generally on the Cerb program? Was it more harm than good?
The Cerb program, first off, we'll deal with that. The Cerb program was let's put it this way. It was a good program. It was a knee-jerk emotional reaction from the government. To defend them, they had to do something. The only thing missing in the Cerb program was there really wasn't a means test. So you worked part-time last year, maybe you're, and not to use a cliche, excuse me, or be sexist, you're a stay-at-home mom doing a great job raising your kids because they're infants still, and the cost of daycare is insane sometimes. So I get that.
Yeah.
Staying home, raising a couple of kids, or it could be and I know cases where the husband's at home raising the kids because the spouse, the mom, has a better paying job. Fair enough. That happens. That happens in a lot of cases. One of my colleagues, that's the case. She makes 3 times more than her husband. He works part-time. She works full-time for now. That's the way it works. So it was designed for people to go, okay, I don't have my job anymore. I get the Cerb. The problem was you were making $5,000 a year last year, and that was really all you needed. Just pick up some extra money, extra shifts, maybe serving 1 day a week, whatever the case may be. Suddenly you needed $24,000. That was not well thought out. There should have been, the only flaw in the Cerb was there really should have been a means test, because the people who needed it are those stay-at-home parents or someone who really lost their job, self-employed, other people like that who fell through the cracks in the system, where the government didn't right away have a solution. They did adjust some things later on, which was great, but that's who it was for. Unfortunately, it was abused by way too many people who looked at it as vacation time. Heck, there's people who applied for Cerb. I talked to a client last night. He's retired. He works part-time doing job security at, the Save on Foods building in Victoria and for a couple of their nonprofit organizations. He's a retired gentleman. He says, I easily could have collected Cerb. He says, but I didn't need it. But he knows of a lot of other people who collected it and abused it. And that's where the problem is with the debt. The best thing people to do would get off the Cerb. Now, the government has put 3 different approaches into the transition to EI, and we'll be here for an hour if I try and do those. Go onto the internet, Google the Cerb transition to EI. You'll go to a government website and you'll see what the qualifications are for EI. They have made it easier, which is patchwork to try and fix the system. If you have no alternative, go on to EI. But as I explained to clients, and I explained to clients' kids, and a lot of people are doing this, they're going into jobs that are not in their chosen profession just to work. Because here's the thing, and people think, well, why would I go do that? And why would I go do that? That's not what I do. What happens is, and here's an actual economic and psychological fact, the longer you're not in the workforce, the harder it is to become employable in the workforce, and the less desirable you are to other employers. So you're looking at this, you're 30 years old, 25 years old, 40 years old, doesn't matter. I'm not picking on millennials here. This is a broader question. But you're young and have many, many years to work. If you don't get back on the horse and find something, you're less desirable, and this could become not a 1 to 2 year COVID-19 Cerb EI problem. This could become your long-term future problem for you and your family. That's the actual reality of this. Find a job. They are out there. It may not be your job, your chosen job of what you want to do, but it gets you back in. And I can tell you this, being a person who hires people, being an employer and a business owner, we look at that. What were you doing? We just hired someone for our White Rock office. Never worked in our business. I hired her 2 minutes because she was hired off the resume. I looked at her career and what she's done. This person will work. We can train them to do the rest. And that's what employers like me, I talk to a lot of other business owners who I know, that's what they look at. Get yourself in the workforce. Don't worry about the EI. The EI is there to transition you, but look for a job.
Well, speaking of transition, let's move to the CRCB. You said there's going to be a lot of letters here and acronyms. CRSB, the Canada Recovery Caregiving Benefit and the Canada Recovery Sickness Benefit. How do you navigate whether to enroll in those? Of course, reminder, again, it all does come back to taxes as well. I feel like that should be the biggest footnote or asterisk that we get to, Peter, is that nothing about this is free. It's supposed to be helpful, but it's not just money simply in your pocket.
Yeah, the CRB, CRCB, ABCD 1, 2, 3. Oh my gosh, this is the $500 a week benefit. for people who are at home looking after kids. They're not eligible. These people aren't eligible for EI. They can't get EI. They can't get Cerb. They have kids at home. Good benefit to get them back on their feet to a part-time job. Taxable money, though. What people have to realize with all these benefits is you need to take a little bit of this money and put it away to pay taxes. The only way you don't have to put this money away for taxes is if your total income for 2020 will be under about, well, $13,000. Let's just round it down here. That's your, that first amount of money you make, about $13,000, you don't pay tax on. So it's your exemption. But if you're going to go more than that, it's going to cost you tax wise, and it's going to cost you 20% in that low, in BC anyways, in that lowest tax bracket under that $46,000, $47,000 range. So you can apply for this benefit. EI is not a solution. You don't have it there. Again, help you out with raising those kids, get back on your feet, because these are for those people who do the part-time income to help with the daycare costs, help with the home, the food costs, et cetera, who just don't have anything to turn to. Nothing wrong with this benefit to get people back on their feet, but people, all these things cost money. And you know how Canada gets out of this debt of billions and billions of dollars? You go to work, you pay taxes, the taxes allow the government to do programs to create more jobs, etc. It's a snowball effect, and it keeps compounding. The best way to get out of a recession and get out of these debt problems, is people go to work, pay their proper taxes at a reasonable level, then they have more disposable income, etc. I know it's cliche, and I know it's me harping and beating the same drum all the time. I'm not being political. I'm talking economics. That's how things work. And you know what? People who do that have more self-worth. They're better. They're more productive person in society. Use the CRB, the CRCB. Use those $500 benefits to get you back on your feet, but use that time to be looking for an alternative job to get you going. There is some discounts in that benefit. If you're working a certain amount, you lose some, etc. All those things are online for you. But look at that benefit if you're an at-home caregiver looking after someone to help you out. Not a bad benefit, actually.
Well, you mentioned businesses, and we're fortunate in this province, in British Columbia, that more things continue to open on a weekly basis here, and that should put more employees becoming available as well, more jobs available, as you were alluding to in episode number 5, Peter, in our last episode, especially when you're thinking of navigating into getting a job if you're a student, or if you're just looking for some immediate work, there should be some available. But to help those businesses maybe hire people, what are some of your suggestions as to what's out there in support for businesses from the government?
Well, the government did that $40,000 loan program. What people don't realize, and this is a good thing, as a business owner, you can get the $40,000 loan program, apply for it. You only have to pay back $30,000 of the $40,000 by December 2022. You have an interest-free loan for 2 years to be put back into your business to keep people on the payroll, hire people. I encourage business owners to apply for this, use the money, keep the youth employed, spread around, hire 2 or 3 or 4 part-time people who are going to school who can put money back into the economy to keep them employed, keep your business afloat. It's a great benefit. But here's the thing, just recently, well, summertime, but anyways, the government expanded this where businesses didn't have to have the certain payroll. Self-employed instead of just incorporated businesses could do this. Businesses who pay out in dividends could do this. Look online at this business loan program. Look at how it's been opened up. Because I talked to a lot of business owners, didn't even realize they could apply for this. They didn't realize they qualified. Go use it, help people out, but don't just hoard the money. That's irresponsible. You know, I harp on millennials, but now I'm going to harp on business owners. Use that money to benefit the employees where it was meant to go, and you inject that $40,000 back into society, back into the economy, And maybe it is just to keep your business afloat. And maybe that kept you afloat through the first 5-6 months, the worst of this pandemic in BC, as now things get opened up. Yes, cases are on the rise. We're getting more cases, but there's also way more testing. The deaths aren't occurring, thank God, because a lot of those deaths were in the, unfortunately, the large majority were over a very advanced age in retirement homes. Those are the actual stats, not the emotional stuff we hear from the media and the politicians. So businesses are opening. Frequent your local businesses, the small mom and pop operations who are they're not making money right now. They're happy to have cash flow to stay afloat. Use the 40,000 to stay afloat, go apply for it, but then budget a plan to pay it back over the next 2 years, because it's like a demand loan. It's all done through your local bank as well. So go online to your bank, and that's where you actually apply for the loan. And I can tell you this, I've helped a few people through it, a few business owners. It's very easy. It literally takes 10 minutes to apply for this. And then within a couple of days, you have the money in your bank and you can use it to help with payroll, rent, whatever the case may be. Just put it to good use. It's a great program.
Peter, just thinking ahead, we're joined by Peter Cishecki, as we always are, on the Your Money Personal Finance podcast. He's the president of Everything Financial. And Peter, you help so many people with your Omni formula. We're talking about this time of COVID. I think everybody would hope that the end is in sight at some point in the next year. But if things regress, if things get worse, what's your advice to a client when you're talking about managing your finances at this time? And that, some people have more income and more set aside previously to talking to you. So, hey, maybe they're not going to be as gravely affected. But I think a lot of people were drastically affected in this window of the pandemic. And now we're a little bit worried if there's another window. Do you have advice for people navigating their finances at this moment, and what they should plan ahead for, how you can help them do that?
Sure thing. Well, first off, one of the worst things you can do, unless you absolutely have to, is deferring payments. Try not to defer mortgage payments. Work with your mortgage people, talk to a mortgage broker, look at going on. This is why for years I've been harping about the line of credit mortgages. They're interest only for emergencies, just not for regular, just for emergencies. You can default back to interest only, which is way better than a deferral program, because what the banks didn't tell you, the only person who won during these deferral programs is the bank, because you deferred your payments. Those payments were added on to the end of your mortgage. So the principal and interest payment is now being charged more interest. It also does affect your credit rating if you didn't start to pay it back right away. So that's the downside. Something you can do, and if you're in a mutual fund situation with a bank, freaking disregard your mutual fund salesperson who's only worried about his commission. Take some of your RSPs if you have to survive, to put food on the table for your kids, to pay your bills, to keep your credit rating even. Better off to take some of those RSPs, TFSA, if you're fortunate enough to have some money in a TFSA, use those to pay the bills. But you have to learn where you're spending your money. Download some of those simple online programs for your smartphone to track how you spend money. Figure out where your money goes, because most people don't know where about 20% to 25% of their money goes. I see this all the time. Look at doing that just to keep you on the right track, because here's the thing. The market is driven by investor sentiment. COVID came upon us very fast in March. Very fast. I was in California with some clients when it hit on Sunday, March 8th. I was in a meeting, and I'm sitting with a client who I go to California every year, and I sat down with clients for dinner, and this is where the Indian Wells tennis event is, and I have a lot of clients involved in that. And the guy said to me, and I was giving him tickets to the Indian Wells tennis for one of the days, and he said, "Too bad about the tennis." And I went, "What do you mean too bad about the tennis?" "Well, it's just been canceled. There was one case in the Coachella Valley." And you're involved with hockey like I am, with TSN and everything else. Remember, from the 8th to the 12th, the night the
Yes.
Canucks were supposed to be in Phoenix. Well, I was supposed to go to that game because tennis was canceled. So I was going to head back to Phoenix to my office in Scottsdale and go to the Canuck game, say hi to some of the guys and do that. All of a sudden, and then the NHL got canceled and life was over as we knew it. There was no hockey. These things can come upon you very fast, but these things can take a swing very fast. It's easy to say second wave, life is over as we know it, we're going to hit a second wave. The truth is there's treatments now for COVID that stop COVID kind of in its tracks that help. They're not foolproof yet, but they do help. So the recovery rate gets quicker. But there's vaccines that are in their third stage of testing. If one of those vaccines gets approved in November or December, even though it will not be readily available right away in mass production, investor confidence and investor sentiment will change quickly and things will be on the road to recovery. What you have to learn as a citizen, as an investor, as a working person saving is now, if it taught you more than anything, plan for the next event, because there's recessions. We had '08, there's corrections. You can go back to the 70s with the oil embargoes of the 70s. I can go through lots of things in my history of the world of being in this business. In the 70s, I was in elementary school, but I've studied all this stuff. I was quite young. I was really.
Yes.
I don't look at today, but I was young then. But you do have all these things. There's always going to be another COVID, correction, recession. There's always something. This is where, if it's taught you anything, take a look inside at your financial situation, reach out to the experts, build a safety plan. But you know what everyone thinks? I don't have enough. It's embarrassing. I don't make enough money. I love it when the client comes in who has, and you know this, John, from knowing me, who has virtually, unfortunately, nothing. But I say fortunately because they can start from the ground up. A registered financial planner is supposed to work with what you have, not look down upon you for what you don't have. It's commercially, yes, but that's what we do. As I say in one of the ads on CTV, I see a $10,000 client every bit as equal to $1 million client. Those are the ones who need help more than ever. This is your opportunity to look at those things, to plan for the next one. Because what if we get a little rebound here and everyone's back to work and the next wave comes in 3 or 4 months because one of the vaccines doesn't work properly, or there's bad side effects on one of the treatments. They're not vaccines, they're not cures by any means, but there's something that happens to go, oh, we can't use that. Maybe you have 3 or 4 month window just to revamp your finances to get ahead. Reach out to the experts who are willing to help you, not charge you. And if someone says, well, you need to put more into TFSAs, you need to put, no. The first thing to know if you're talking to a true expert who has you in mind is, the first thing they'll do is look at your cash flow, look at your debt. That's how every financial plan starts. Not, well, how much do you have in RSPs and mutual funds, and what are you earning? Let me look at this solution over here. I'm going to make you way more money. Run for the frickin' door as fast as you can. So the lesson is always wear good sneakers when you go into a financial planner's office.
Well, my advice is, and the lesson I've learned is, go to the experts at Everything Financial. Go to Peter Cishecki, who we're speaking with right now, the president of Everything Financial, who cares about you, cares about your money. Those two things need to be on the same wavelength, not just your money, caring about the person as well. And that does it for episode 6 of the Your Money Personal Finance podcast. Reminder to like, subscribe, and review our podcast on all of its platforms, including the Everything Financial channel on YouTube. It's Everything Mortgages now too at everythingfinancial.com. And you can email your questions to us, yourmoney@everythingfinancial.com. Peter, thanks for episode 6. It's a very important one as it relates to our world these days, and looking forward to episode 7, my friend.
Thanks, John. What is in episode 7, by the way? What do we got coming up?
Well, we're going to talk about wills and estate planning. So something very important for most people looking towards the how to take care of their families, how to take care of themselves. And a lot of people think they can put it off, and that's not a good idea. So you're going to be able to help us out and tell us more.
Great. Looking forward to listening to Bart Aldrich talk about that. Great notary, great guy. Definitely there to help clients. So that should be a fun episode.
Yes, special guest on episode 7. Thanks, Peter.
All right. Have a great day.